Hello again, friends and neighbors. Drew Johnson here, East Region Grain Origination Manager with Agtegra with the weekly market updates. Markets were mostly higher this week, but we are seeing a little bit of a sell-off as we end the month of January, so let's get right into it. On the corn side of things, corn values moved higher most of the week, but had a hard time pushing through the 430 futures level on the March board, and likewise, December corn is hitting resistance right around 460 futures. U.S. dollar weakness providing support in the corn market, along with the positive moves this week in the soybeans and the wheat complexes. Dryness in Argentina remains a concern going forward, as the corn crop is pegged at 46% good to excellent, which is 6 points lower than last week, and Brazil's second crop planting is about 5% complete, and this is ahead of last year's pace. On to the soybean market. Soybeans continued to rally most of the week on worries of the Argentina soybean crop and a lower U.S. dollar. March soybean futures broke through the 1070 resistance levels and had tried to push up to 1085, but so far has been unable to hold. November futures likewise pushed through the 1080 resistance level and tried to hit the $11 mark this week, but so far unable to hold that as well. On to the wheat market. The Kansas winter wheat futures recovered from Monday's losses this week on worries of cold temps and much needed rain in the U.S. winter wheat belt. The cold snap has the market worried about winter kill. Kansas winter wheat futures hitting resistance at 550 March futures. Minneapolis spring wheat futures along for the ride for most of the week and bumping up against resistance at 580. The U.S. wheat export sales report came in at 20.5 million bushels. This was on the upper end of expectation and has helped to support the U.S. wheat market along with a weaker U.S. dollar. For pricing opportunities or for more information on the markets, please contact your local grain marketing specialist. We are here to help. That's what we do.